Good morning. Happy Friday, the 11th of September. I'm Jessica Amir, market analyst with Bell Direct. Well, markets attempted to rally ahead overnight in the US, but the tech pullback returned as investors questioned how expensive US stocks are based on the earnings that they generate. This is known as the price to earnings ratio, with the market now trading at about 19 times forward earnings. Adding to the mix, investors also weighed up weaker than expected weekly jobless claims data that came out. Apple shares were up about 2.7% earlier, but they ended 3.3% lower. Tesla meeting a same fate, but held up a little bit stronger. Tesla gained 8%, but then ended 1.4% higher, while Facebook and Amazon fell about 2% each. On the other side of town, fashion stocks did well though, like Tapestry up about 8% and Ralph Lauren up 3%. But the main broad indices rubbed out most of the prior day's gains, with the Dow down 1.5% and the broader S&P 500 losing 1.8%, while the Nasdaq fell 2% just a day after popping 2.7% higher. On the commodity front, the oil price retreated about 0.1% to $37.23 US. Gold lost a touch of shine, losing 0.5% to $1,955 US an ounce, really after the US dollar lifted. And the strength of the US dollar has seen the Aussie dollar retreat. It's now at 72.7 US. That's a 3-day low. So what to watch today? Well, Aussie investors are expecting a negative session. The futures were earlier suggesting a 1.3% fall. So far this week, the market is already sitting with a loss of 0.3% from Monday to Thursday and is marking its fourth straight weekly pullback. Companies going ex-dividend today, transferring the right of the dividend to shareholders, include Cleanaway Waste Management, CWY, ALI, EGL, GRRPRM, SEQ and VEE, all transferring dividend rights to shareholders. Now looking at trading ideas that may be worth a look, the fertilizer and explosive giant Incitec Pivot IPO was upgraded by UBS from a hold to a buy with a $2.40 target. Following a recovery in the global fertilizer pricing market, UBS says despite IPL largely underperforming the ASX 200 since May, IPL is now attractively priced and valued and is positioned to benefit from an uptick in ammonia prices as well. So that's IPL, now a UBS buy. Medical software company Pro Medicus PME was downgraded from a buy to a hold by Bell Potter with a $26.50 target, and that implies just 2% upside from yesterday's close of $25.98. Now, its shares have been outperforming the market this year. They're already up about 17% as the company has exceptionally grown its revenues and earnings by over 16%. In most regions in the US, hospital imaging volumes are at 95% of pre-COVID levels, except in California and Texas. So where to from here? Well, Bell Potter expects the company's earnings to continue to grow, but its earnings will likely suffer from currency movements, in particular the US dollar. And Saracen Minerals and Musgrave Minerals, so SAR and MGR, as well as Tesora TSO, those three stocks may be worth a look as Trading Central's data tells us their shares are giving off bullish signals, indicating their shares may rise off yesterday's close. I'm Jessica Amir with Bell Direct. Happy trading, stay safe. I'll see you for the weekly wrap.